You're listening to Top Dollar, a podcast focused on giving people meaningful knowledge in the financial world. My name is Andrew Eisel alongside Wesley Young, and we are your co-hosts, providing you with our insights on trades you should consider, financial news, and everything in between. Thanks for tuning in. All right. Hello, everyone, and welcome to the first episode of Top Dollar, a podcast from what you probably saw in the intro, focused on giving our financial insights on some stocks, some news, and anything else we can come up with. My name's Andrew.
I'm Wesley.
And this is being recorded from my basement right now. We're just two college kids trying to find something to do, and we figured a podcast talking about something that we love would be something great to do.
And in college, we're both majoring in finance too, so we have a little bit of a vested interest in some of the stuff. And
yeah, we're both attending Penn State Smeal College of Business. Super excited about that.
Hopefully, the classes aren't online.
Yeah, I'm praying. I'm getting sick of Google Classroom right now. I'm hoping that my first class isn't on Zoom.
I don't want to be known as a graduate from Zoom University. So.
Me either. So I guess we'll hop into our first segment here. That is the current market status and some opinions on why we think some stocks moved up, some moved down.
We want to talk about some of our winners and losers that we've picked out for this week and that we're picking out for next week as well.
Yeah.
So our first winner that we both picked out is Tesla, up 27%. Tesla I see as a huge momentum stock. They are very volatile. Throughout the week, they'll be up maybe 10%, they'll be down 9% the next day. I see them as very unpredictable, but in the long haul, I mean, I think they're a solid play in the long haul. I think that their company has a lot of traction. Elon Musk, he's a good business owner. He's owned a lot of different, all the way from PayPal to Tesla to StockX, or not StockX, to
SpaceX.
SpaceX, yeah. He has a lot of
hype beast, Elon Musk.
Yeah, but I think that he's gonna make their company do great things. And
yeah, didn't you own Tesla before?
Yeah, I bought into Tesla. That was my first ever stock trade I've ever done.
What would you buy in at?
I bought in at 305. I held it for like a year, and it was down for like most of the year, and then it came back up to 385 a share, and I'm like, all right, I'm getting out. It's not going up anymore. And then
what? Not even a month later, was it $900?
$900, yeah.
Wow. What a play! What a play!
I was punching myself, but I mean, I still made, I think, 25% or 22% on that investment. So I'm happy. I'll settle, but
yeah, I think Tesla in these times is also up a bunch because not only are they creating some quality consumer cars, but right now they're creating a bunch of ventilators for hospitals all over the country during this pandemic. So that's a source of income. And I think a lot of people say that Tesla is overvalued, but I also heard from people that, and myself, I believe that they're just now figuring out their value. I think investors are finally understanding
what their true value
is and how much potential there is in this company. And I always kind of relate Tesla to almost like Apple. People in teenagers, they want to buy an iPhone because of the Apple logo on the background. Yeah, because it's the iPhone. It's
Everyone
the cool thing to get. Yeah, nobody.
Cool thing to get.
Yeah, it's the cool thing to get. And I think soon Tesla, at least in my opinion, is going to be that car company. It's like, I want a Tesla because it has the coolest technology. It's got a sick logo. It looks super sleek.
It's good for the environment.
It's good for the environment. Environmentalists love it. I think down the road, it's going to morph into that brand.
Yeah.
You see it and you just see superiority, and you see luxury.
It's the first company to really like head start that movement towards all electric cars that I think we're going to be seeing a lot of the next 10 to 15 years.
Yeah, the pioneering it almost.
A big movement to all electric. So
I think their biggest issue right now is just range on cars. I mean, it's tough. It's tough when you're going models, when you're driving on vacation somewhere 500 miles away and you're getting like 350 tops before you got to charge up for a couple hours.
You gotta hang out there for 45 minutes at the gas station.
You gotta sit at a Sheetz supercharger.
Yeah.
But anyway, so that's Tesla. We think there's a lot of growth, and a lot of potential.
And honestly, I don't know what they're gonna do next week. I could say, oh, they're gonna be down, oh, they're gonna be up for sure, but I truly don't know with them. They're a little bit everywhere, so
yeah. Hey, that's the risk. It's a volatile stock for sure.
Mm-hmm.
So our next stock that was a winner last week and a winner that we're projecting in the future is AMD, which stands for
Advanced Micro Devices.
Advanced Micro Devices. That's right. They were up 16% last week, and we think it's due to the fact that they create processors and chips that go inside of different computers, gaming systems, and a whole bunch of other electronics.
And I think investors are beginning to realize the momentum that AMD has and the ability that they have to turn a profit on some of these processors and chips and semiconductors that they're creating. So
yeah, and not only that, they're in gaming consoles. So people, Wes, you were talking before to me about that you think the gaming industry is going to explode here in the coming months because you have the new Xbox coming out and you have the PS5 coming out this holiday season. So I think there's going to be high demand for gaming. And not only does AMD get you in that gaming pool, with they're making their chips there, but you get some new computers from people working at home and stuff like that.
Correct. And I think AMD is a strong play. So a lot of people have been speculating about the gaming community. Oh, it's going to be worth $500 billion in the next 5 years. Oh, it's going to be worth over $1 trillion in the next 7 years. No one really knows, but everyone knows that it's going to be a big part of our lives in the future and of the way that we, how would you say, like entertainment, a new form of entertainment that is brought up in this new younger generation. So a way that I see to get involved in that,
the whole market
of gaming, and not only if you want to buy Activision Blizzard or EA, those are options to get involved in that gaming community. But I think that AMD is also a strong play to get your chips in and say, I want a part of this profit that we're going to be seeing the next 5 years. So I think AMD is a good buy if you want to get into some of that market.
I like the pun there. Get your chips in.
Yeah.
Processing chips. Yeah. So pretty much just a summary on that. The demand for processing power is going up, and we believe that AMD is the company that is going to be the front runner into that future of new processing power. Recently, last year, they surpassed Intel in amount of chips manufactured and sold. So I'm sure a bunch of you are familiar with Intel. Their little logo is probably on maybe a computer at your house. So,
and right now I like AMD more than Intel for a buy. So that's just me personally, but I think they're a really strong company for the future. So
yeah, and AMD is not one of those stocks that you're going to want to turn on quick. I mean, they've had a long period of positive growth. So it's one of those that you're going to want to maybe diversify your portfolio with, and give it a little more volume than everything else, because if you're holding on to it,
adds a little bit of risk to your portfolio if you're looking for that as well.
Yes. So another winner that we have, and this is a winner that we're projecting to go up in the next week, is Chipotle. Everybody loves Chipotle. I don't know too many people that don't Chipotle. Like it.
I eat it like twice a week, I think.
Yeah. Wes and I are the reason that their stock's going up. We buy it so much. But I think we think the main reason Chipotle is going to go up is it's so easy, and it's so easy to get.
Yeah, convenience.
Convenience. You walk in, you walk up to the glass, you order your food, and you're up and out of there. You're not waiting around for a waiter to come take your order. You're not sitting there. That's why I think a lot of other restaurants are struggling heavily.
And I think that they have done a really, really good job of adapting to the new times that we're going through with this coronavirus. They have really adapted to online ordering. You order your food through the app. You just walk in, pick it up, and you're in and out. No human contact or anything like that. So I think that's where they've really capitalized, and that's where they're kind of saving themselves. If they wouldn't have adapted like they have, I don't know if their stock would be up like this, and I don't know how their future outlook would look. But
yeah, it's almost a level of transparency. I mean, the glass is literally, you can look right through it. You see them handling your food. You see it being almost produced all the way up until you buy it, and you're out of there. And I think people walking into Chipotle too, I think maybe people are more scared too of other companies like DoorDash or Uber Eats or something like that, where, you know, that's just one other person touching your food.
Your food is in their cart too, so that adds a little.
Yeah, and Chipotle is definitely a heavy appeal to the younger generation.
Mm-hmm.
So
yeah,
I know
millennials, college kids love it. So.
Yeah, I think there's definitely a lot of potential for that, and especially during this time.
Yeah, they could definitely see some new stores opening after this outbreak kind of calms down. So.
I'm glad Altoona got one for sure.
Yeah.
And our final winner is Amazon. I mean, there's not really a ton to say here. It's Amazon,
the powerhouse,
always a powerhouse, and they will be for a long time. And especially now in this coming week, this is why we're projecting it to be a winner.
Mm-hmm.
Let's say you're shopping. Are you gonna risk it and go to Walmart and maybe touch something that somebody else touched, or you know, you're in close proximity of a bunch of people and you're not sure, you know, who has the virus, who doesn't.
Yep.
Or you could stay in your own home, order it, and have it delivered to you.
It's a reliable delivery. You know, they're Amazon Prime. They're known for getting stuff to you on time.
Yeah.
You know,
well, that brings
reliable.
up another point too. Amazon Prime right now has been super reliable. You know, in the past, it's been super reliable. You order something, you have Amazon Prime, it's there in 2 days.
And now it's like reinforcing that reliability almost.
Yeah, but now when we had ordered some equipment for our podcast, Amazon Prime actually, it's not that it's not a thing anymore, but they don't guarantee 2-day delivery.
It's prioritizing essentials over non-essentials. So,
which just goes to show you how much volume they're taking out of their warehouse right now.
Yeah,
I mean, it must be crazy that Amazon Prime, their most reliable and heavy source of income, is being compromised almost right now.
And thing to take into consideration as well is they hired, I think it was 100,000 more employees.
Wow.
In the past month, I believe, to be able to
keep up with demand and stuff.
Sustain the demand.
Yeah. So,
and then our projection for next week to be a loser is Lululemon. A fan of many, but not a fan of Dave Portnoy.
No, lost him a lot of money.
Yeah, he took the wrong side of that one, but we project Lululemon to be a loser next week because they're a luxury good. Knowing that, so let me go back to that. They're a luxury good. Knowing that, I don't think a lot of people are going to be buying luxury goods right now when their money might be tied up in other things. Or
if they don't have a job.
Yeah.
I mean, unemployment is through the roof right now. If you don't have a job, you're not going to be buying $100 pair of leggings.
Yeah.
I mean, come on. You're going to be paying your water bill. You're going to be paying the phone bill.
The essentials.
Yeah, you're going to be saving that money for food and not some teal leggings.
In the past week, you got some people want to argue, oh, they're up 11% in the past week. That was because of their quarter one earnings. So that is built in to their stock right now. But investors don't know what their quarter two earnings are going to bring. And I think that their quarter two earnings are going to be a little bit below their expected, their projections. So that's why I think we're going to see a little bit of the negative side of Lululemon in the next week and possibly the following weeks. I'm not sure about the following weeks, but definitely next week I'm going to see if they're negative. So
and to not focus on the next stock as one individual company. I think airlines as a whole are still going to be taking a downturn.
Yeah, they're going to be struggling.
Yeah, I mean, people right now are deathly afraid to go anywhere, let alone fly to another state. And I don't even know if you can still fly to another country yet. But if you're doing that, you're crazy. Unless it is completely essential and you need to be somewhere or else you're going to lose your job or something, then you can fly. Yeah. But if you're just going to Fort Lauderdale or somewhere to go vacation, I can't see that being a great idea. And not only are they not selling tickets, they're refunding. My family was scheduled to get on a plane and fly down to Florida here in a month, but we had to cancel it. Our trip was canceled, and we actually got refunded our money. So not only are they, like I said, losing out on ticket sales, but they're giving money that they have back. So I think they're going to be really short on money, and I think it could take months and maybe even years for the airline market to fully recover.
And I think that their saving grace is going to be the federal government because I think Trump really likes the airlines, especially Boeing for some reason. I think he's
an American company. Come on.
he's gonna bail them out, but I think that that's gonna take some time for them to recoup their losses and get back to flying people with the volume that they were prior to this pandemic.
Yeah, that's a for sure. So next segment is going to be our investment plans for the next week. Wes, you want to start this one off?
Yeah, I'll take this one. So my investment plan for the next week, Monday, April 20th, is I'm going to base mine off the S&P 500 because the ETF that I will be buying into is SPXL. It is a highly volatile stock, and it tracks the S&P 500, but it gets me 3 times exposure to the market by using leverages and derivatives and invest in debt and like derivatives and certain stuff like that. So on the green side, if S&P is trading up 2% for one day, I'm up 6%. I'm looking great. But if I hit it on the wrong day, I'm down 6%. So it's definitely a highly risky stock, and I usually don't hold this stock. I definitely wouldn't hold it over the weekend. I rarely hold this stock overnight. I usually trade it intraday, so it's more of a day trade for me. But as we look over the weekend, if
doesn't that sound great in theory? 3 times the S&P.
Mm-hmm.
That'd be awesome if it always worked out like that.
Exactly.
We'd all be rich.
And if you didn't start getting scared, you're like, oh, down 6, down 9, oh man. Yeah. But so over the weekend, on Sunday I'm going to be looking at the futures for Monday, and if the futures are in the red, and if Monday opens up red, I'm considering buying on Monday. Not sure, but if I don't buy in on Monday, if it's red, then the overnight on Monday. If it is also red or neutral, then I'll buy in on Tuesday. But if it's green, I think I'm just gonna let it stay green, kind of watch it. I think that we're gonna see some redness in this coming market for this coming week, in the market for this coming week. So that's why I'm a little bit hesitant to buy in. Normally I'd just be buy, sell, buy, sell, buy, sell, but I'm a little hesitant. I think we're gonna get a little bit of a pullback this coming week. So
did you say you're gonna get into some tanker stocks too, some oil tanker stocks?
Yeah. If I don't buy into SPXL, I was looking at some crude oil stocks, and I was reading some articles that some people have posted about the contango of the crude oil. So a contango is when future prices of a commodity is higher than the spot price. So oil, as we know, is a commodity, and you buy oil as a future. So for the future for May is actually lower now. It's at around 18 a barrel. And the future for June is $10 to $11 higher than what it is in May. So that future is $10 to $11 higher, meaning that is like the cost of carry or the cost of like storage. So analysts are projecting that whenever Saudi Arabia and those big OPEC companies produce this oil, the cost of carrying that oil and holding it for a higher price is $10 to $11 a barrel. So that's really important now if you're thinking about some oil tanker stocks, because you have to take into consideration, they have millions of barrels of oil. Where are they going to put all this oil? And I think that they're going to store it on some of these big tankers in the ocean, or maybe dock them somewhere on the docks in Saudi Arabia in the Middle East. But I think that anyway, these tanker stocks can see a big some profit here in their production of the tankers. So the one company that I was really looking at buying into for this contango effect is NAT, Nordic American Tankers. They look like a really, really strong stock to me, especially due to their 14.25% dividend yield, some of the highest dividend yields that the market can offer right now. And they have good volume. So
it's crazy high.
Yeah, they have good volume. So that's a good, day trade stock. Shows that there's a decent amount of movement. And I think that I might start buying in a little bit of a time into this stock to see, maybe where it goes. I'm looking on Yahoo Finance right now, and they're trading at $4.03 a share, and their 1 year target estimate is $6.08 a share. So I don't know. I might give it a try. I might throw. And the good thing about it being $4.03 is that you don't need a lot of money to buy a lot of volume of stock, which means that if it goes up 4 or 5%, you'll get a lot more benefit than if it's less. Or if, like right now was the worst time for Saudi Arabia and Russia to start competing over prices, and as we see that 10% cut in supply, we'll begin to see prices rising again overall, and hopefully regain some of their losses that they have incurred for the past month, 2 months. And
yeah, super crazy fact about oil. I had read an article that the oil that goes in the barrel costs less than the barrel itself. You could go to Home Depot.
That's insane.
You could go to Home Depot right now and buy a barrel, and it would cost more than a quote barrel of oil.
That's crazy.
That is crazy.
Yeah.
So this takes us into our final segment, hopefully one that is popular with our viewers. It's called Bust or Boom, and it's an ongoing competition between Wes and I, and we're both going to pick either one volatile stock or maybe a blue chip stock that you know is going to go up a percent in that week. But really what it is at its base is it's a competition. We're going to pick one stock at the beginning of the week, and this stock is going to be is what we think is going to be our winner, and it has to outperform our opponent's stock, and the winner is decided by the greatest weekly return. So my Buster Boom stock for this week is Inovio. It's a pharmaceutical company that I had recently bought into about a month ago, and I'd actually lost money on it because they were trading around $4 or $5 range right as soon as the coronavirus had caught some traction in the United States. And they had said they're going to get a vaccine for it, and as soon as it hit the United States, everybody was scrambling, and investors were putting money in some different pharmaceuticals to try to get these vaccines jump started.
A lot of people were pulling out of the market.
And its price shot up to about $22. I'm like,
wow.
I for whatever reason, I thought there would be a ton of potential in this. I bought in at about 20, and I held on to it. It went up to 22. I was doing well, and then it fell back down to 19. I got scared, got out, and it's currently trading at $8.23 as of market close on Friday. And in this upcoming week, they had actually just received huge funding in South Korea for their vaccine trials, and I think that'll bring a lot of money in, and I see a bunch of potential growth for them in this next week, and I think it's going to beat your stock.
Okay. Well, mine is kind of it's in a similar asset class to Andrew's. It is a biotech company. It's called Gilead Sciences. Their ticker is GILD. Today, or actually on Friday, they were up 9.73%, so big green. They're like, let me think.
Oh, they're a pharmaceutical, right?
Yeah. Well, the special thing about this company is that they're getting backed by the government to attempt to create treatments for coronavirus.
Oh, so they're not in the vaccine industry. They're in like a treatment.
In the testing and treatment industry.
Okay.
So if they become successful with this treatment and start mass producing this, I see a big green side to this stock. So that's my my Buster Boom pick. It's either they're going to get the vaccine, they're going to take off, or they're not going to get in. Their stock's going to sink a little bit because their volume right now is massive. Their volume was 93 million on Friday, which is insane. And their average volume is 22 million. So it's a large attraction to day traders. So
undefeated. I'm going 1-0 this week.
I see it going up a little bit. 1-0. We'll see.
All right. So kind of a wrap up here. If you enjoyed this episode, feel free to go ahead and subscribe to us and
come back for the next one.
Yeah, go ahead and check in next episode to see who won the Buster Boom pick. And next episode, we're going to be having an interview from Dick Young. His uncle. He's the executive. He is an executive of Zephyr Point. It's a nonprofit organization that has been forced to close due to COVID-19. So they're one of those small businesses that has really been hit hard. And not only have the executives been hit hard, but their workers, their employees, they're not receiving paychecks. And
they applied for the business loan and were one of the last people to get a business loan. So they were super lucky. That's crazy. Yeah. And
that's super important too. I mean, those people are now getting
like if he we'll wait for the interview, but he said that it would not have been good for their company if they wouldn't have received that.
No, and I think
business loan. So
that's definitely the same with a lot of companies. There was a special on Fox News. I heard a lady who owned a coffee shop said they were going under if they didn't get that small business loan.
I think it's definitely saved a lot of people.
Yeah. But, I mean, it's terrible they ran out of money, too.
I know.
That's terrible.
Mm-hmm. But we're going to talk to him next episode and get his input on this whole situation as a small business owner. And he's going to talk about how difficult it actually was to get this loan. So tune in next time to that one, and it'll be a good one, I think. So.
Yep. Thanks for tuning in. We'll see you next time.
See you next time.